Okay, good morning, everyone, and welcome to this live intraday strategy webinar. Today is Tuesday, November 23rd. Mike Boutros with you on the horn. Good morning to Aurelian, Jay, Steve, everyone in the room. Great to see you guys. Some quick housekeeping. This is actually the last webinar of the year as we get prepared to welcome the next latest edition of the Boutros family, and we head into the holidays. So we will be keeping the updates sporadic, but they'll keep the updates as long as things are moving. And obviously, Jamie will still be running the ship as well. So I just wanted to give you that heads up. With that, let's jump right in. The DXY pressing again. This is the fifth consecutive weekly rally. Major resistance up ahead. So we got to take a look at DXY. Consequential support in Euro, Sterling heading towards support, Kiwi looking like a break of support, gold, Aussie, dollar yen, crude oil, dollar Swiss, Bitcoin, and SPX. It's a long list there, but any other questions or trade setups you guys want to review, as always, feel free to throw them on the message board at any time. Let's jump right in. Here's the DXY looked like in my update for you guys yesterday. It's been pretty clear, okay? This major resistance we've been talking about for quite some time. Theodore, great to see you in the room, sir. 10-year, please. Yeah, I got you. 10-year yields? Absolutely. We'll take a look at that as well. For the DXY, this is huge resistance, okay? We've been talking about this zone for a while, ever since the breakout above 94.60s, this zone right here, which was really big. First level was 95.15, second was right here, and we're trading into that region right now. It's defined by the 50% retracement, decline off last year's high, and last year's objective yearly open. Now that whole range converges on downslope support, or excuse me, downslope resistance, and upslope resistance just a little higher. That's all to say, this is huge, okay? Things to take note of. We are in overbought territory, okay? So the propensity for the market to keep going is still there. By the way, this was our largest drive into overbought in the DXY since back here in 2014, to put things in perspective. So the momentum is definitely in the favor of the bulls still, but we're heading into big resistance. We would need to see momentum duck back below that 70 region on the weekly close. Okay, big resistance on the weekly chart. Here's DXY in the daily chart. Similar scenario, right? Same levels, 2020 open, 96.50. There's that downslope resistance. We're testing that right now. On the daily chart, looks like you're making some divergence. Now, it's not a strong divergence signal. Remember, above 70 tend to be weak signals, but nonetheless, you're starting to see a little bit of a waning for the top side. So near-term support, 96.10. If you break below that, you'd look for a near-term correction, a little pullback in the dollar. We're still broadly constructive. We're still bullish the dollar, but we are at resistance here. So if you take a look at the intraday chart to see what this thing's been doing on the 2-hour, here's what it looks like since the start of the week. Okay. Your weekly open now comes in just below that 96.10 level, and that's going to be our near-term bullish invalidation. Okay, 96.07, 96.10. It's the objective weekly open. Just pips lower is the objective weekly opening range lows. So again, if we break this low objectively, that'd be looking lower. And that would risk a little bit more of a correction. Listen, at the end of the day, this is still constructive while above 96. Topside level from here, if we push higher, is 96.98. It's the August 2018 high. And then the big resistance zone is here just above or into the 97s, just below 98. So long story short, the dollar advance is coming into some lateral levels of resistance, some slope levels of resistance, which may curb the appetite near term. Watch the weekly close. Okay, if we maintain stance above 70 and price closes above 96.50 on a weekly close basis, that's a breakout. That's a major breakout. Until it does, the immediate advance is a little bit vulnerable here. All right. As far as data is concerned, you get manufacturing PMI later this morning at 9:45. Not expecting to see much of a move there. And tomorrow, obviously, we're heading into the close of the week with the holiday weekend. So you got durable goods orders from the US on tap. You got core PCE It's the personal consumption expenditure, the Fed's preferred inflationary gauge. This is for the read for October. That's expected to come higher at 4.1% versus the previous clip at 3.6. So that inflation story continues to gather pace here. Any questions on the DXY from these levels? It's still constructive, but that long side is getting a little vulnerable here. Okay, we're heading into longer term downslope resistance and last year's objective yearly open. That's number one, euro, DXY rather. I want to jump into euro, but before I did, Theodore, I want to jump into 10-year since you asked about it. Here's what the 10-year looks like. I haven't updated this chart, by the way, just as you guys know, for weeks. All the levels you see here are the same levels we mapped out back in November. Okay, so here was the rally that ceased right at the high day close for the year. That was 170. You pulled back from that right into this major pivot, former highs from July, former lows, where this was the actual swing low from back in August of last year. Beautiful touch, massive rally. What is this? Are we breaking back above that pivot? Watch today's close. Here's what it looks like on the intraday. I haven't really been following this, but let's just see what comes out here. This is the 240. Let me get the 240. This is the 120. Okay, so drop this. This is the original slope that we're working with. Broke above it last month actually. Here's the rebound. Okay, so this was the high. We're right here at the high day close. Wow, is 160, 163. This is important. Watch this today. If today closes above 163, that's actually a breakout. Okay, that's not only the high day close, but it's also the 1618 off the low and the 786 off the high. Nice confluence zone. If we close above this region, Theodore, that would actually be a continuation. That'd be like a marking continuation mark higher. Big reversal, head and shoulders under construction, possibly, absolutely, possibly. I wouldn't jump on this head and shoulders. I see how you can envision it, but I am Ty, great to see you. Theodore, Ty, we'll call it even. Andrew, Andros, great to see you, sir. So I think this might be a resumption trade if we close at this level. And it's not surprising to see that with DXY here at the highs. I would just use caution here today. Okay, I want to see what today looks like on the close. There's nothing here that sort of screams out. Let me just see where the 88.6 comes in. Hmm, 167. Level to watch there. But definitely the long side looks a little vulnerable. Looks a little vulnerable here, Ty, for sure. Iman says, good morning, Mike. I hope all is perfect. And fortunately, we are prepping ourselves to have one webinar in the week from you. Yeah, Iman, I just actually was doing some housekeeping earlier in the session. This is actually my last webinar for the year. Next one's scheduled for January 4th. I'll still be giving out updates as the markets are moving, but we got little baby Boutros on the way and the move. So I will be indisposed for live sessions until the start of the new year. But I'll try to keep you updated on the intraday page for sure. So that's the 10-year, Ty. I wish I had a little bit more of a tell for you, but not here. It says one webinar a week or no. So Ty, no, this will be the last webinar for this year. If anything moves major, guys, and I'm able to settle in a new house and the baby's here and something's moving next year, I will drop a webinar if there's something that warrants it. But that aside, the next one's scheduled for January 4th. I'll still be giving the intraday updates, and Jamie will still be giving the swing updates as well. So just some housekeeping there. All right, so moving right along. That's a 10-year. Here's euro. Quick segue. So euro heading into this week was coming in some very interesting levels. The one that we were highlighting was this. Okay, this was what we published. I think this was last week. Ty, the free ones as well. Yeah, so I'm done with daily FX till the end of the year. Ty, same thing there. The first one will be next year. Okay, so for the euro, let me just show you the weekly chart first. This was huge. Do you guys remember 114.45/92? We talked about this for a very long time. It was the objective yearly open from 2019 and the 50% retracement of last year's rally. That level had downslope support there as well. Break, first level of interest was 1290, that's the 618. Second level is the 1618 off the high, converges on former slope resistance turned support right here. Break, support, support. We're there right now. We're there right now. So for euro, it's a very similar scenario in where you have DXY stretching towards its slope resistance. You have euro stretching towards its slope resistance at support as well, and then 100% 1618 rather. That's 112.22. Again, the same type of momentum profile as we dig deep into oversold territory. We're at lateral support. We're at slope support. This is big. Watch this region. Here's what euro looks like on the daily chart. So if we open up the zone just a little bit more, the 618 retracement of the entire 2016 rally. Okay, so this retracement right here, the 618 is right there at 111.86. The 1618 we just talked about is 112.22. That's your key support zone for euro over the next couple of days. This is huge. And we got what we expected. Remember, we always say a break of downslope support, typically the sharpest part of the decline. Here it is. This is your first major lateral level of support. I'm looking for an exhaustion low near term into 111.86, 112.22. All right, that's the daily chart. Here's the intraday. So I didn't have much of a setup on this last week, but I did want to show you those critical levels of support. So there's the 1618, excuse me, there's a 618 rather at 1290. Here's the 1618 at 1186. Haven't quite made it just there yet. Okay, so this other extension that we added, which is the same for this 100, right? So that 1618 is extending off the highs of the year from here. That's 122. 112.22 rather. So weekly open is setting up right above a confluence support zone. If this breakout of this descending channel was legit, here's the breakout, support, support, support still. Looking for a break of the weekly opening range. The downside is vulnerable into 112, period. End of conversation. All right, so we're basically on the lookout for like an exhaustion type of play here. For euro dollar. Any buckle close below 1186, it's likely to be a much more substantiated decline. In that scenario, guys, you're basically risking 110. I mean, there's not much in between here. Even if we get down back into lateral levels and go back way, way back, you have some pivots here, but there's nothing major, no major highs, no major lows, no major fibs. Very problematic if we get below 111.86 in euro. So looking for possible basing, possible near-term downside exhaustion into this zone. Questions on euro. A pop back above 112.90 would put you at least on a near-term, like, what's the word I'm looking? Recovery path, right? You'd be looking for a rally back towards 1370s, 1380s, basically the highs that we made in that swing on Thursday and Friday of last week. But all eyes right now are on this key range right above major, major support. Major support. Questions on euro? All right. For euro, by the way, heading into early next week, guys, we are going to get the release of core inflation figures from the Eurozone area. So looking for that as we head into, I think it's scheduled for November 30th. Ty, yeah, I'll hit silver, sure, as soon as we hit gold as well. I got you. So that is euro number 3. Euro at support. Checking to see what kind of inflection we get here off of 112. Sterling, another story of a trade that's also coming into its support zone. Here's sterling first on the weekly charts. So little bit lower gets you into a major support zone. And it was the basic zone that we were looking for on this drop a few weeks back. You got a little bit of a recovery last week, halted right at the 2017 high week close before pulling back. Beautiful stuff. Here's the drop again. The big zone is 32.45 into 33. What is that defined by? Well, it's the 100% extension off the high. 1, 2, 3, right into the low, 33.04. You got the 618 retracement of the decline off the highs made in 2018, major pivot in price. That's 32.45. And then you got last year's objective yearly open, decent pivot in price. Both of those levels, all three of those levels converge on the downslope off this year's highs. So very similar scenario, right? The trend is still lower, but euro, sterling, both of those declines now extending into some pretty major support zones. So you don't want to be the guy trying to catch the low, right? Trying to catch a falling knife. But at the end of the day, we have to recognize when these clear, broadly defined trends are at risk. And I think that's where we are in sterling right now. Here's what it looks like on the daily chart. So same slope, nothing really to change here. Again, highlighting 33 is that 100% extension off the high, 2 equal legs converging right in that lower parallel over the next week or so, right to the start of December trade. So what do we do here? Well, if you're holding shorts, you're bringing your stops down. I'd be clipping off some here, but at the end of the day, look at that slope. It comes right into 33.25. And then again, that 33 handle's pretty major. So you're fading out of any short positioning here. New positioning, I don't have anything yet. Can we get the daily and hourly together? Yeah, absolutely. Here's what the daily and hourly look like together, Ty. So again, downside within this decline, here's the formation we've been following on the intraday chart. And that one, we did a slight tweak for what we were looking at the previous week. But just to show you, again, here's what sterling looked like last night. Little tweak, but pretty clear break and buckle back below that low day close, that key zone of support into 34.10, 34.25. We were watching that since last week. Opens up again, near-term support right here at that 33.25. Huge support into 33. Looking for downside exhaustion into these levels. Near-term resistance now is 34.25. Bearish inval is at the objective weekly open. And that objective weekly open converges on the weekly opening range highs and slope resistance. Okay, so key resistance, bearish inval. Anything above 35 and you're looking for a larger recovery. But for now, the whole focus is, do we get exhaustion into the 33 level? And I'm looking for that. Questions? No sterling data of merit, at least until we get into next week. So just continue to look at market sentiment and the dollar to drive this one. Sterling heading in some major support down to 33. Again, there's the side-by-side for you, Ty. All right, that is number 4, British pound. Number 5 is Kiwi dollar. So Kiwi is one of those trades, again, which is heading into a major support. We highlighted this yesterday. If this break is legit, man, Kiwi's in big trouble. Here's what the weekly chart looks like. Here's what it looks like now. This is massive support. We've talked about this for quite some time. The level extends from 69.42 into 69.69. You got the 618 of the advance off the yearly low. You got the 2019 swing high, tons of slope, and it's all right here. So on the weekly chart, guys, the focus is where we close in relation to this major key pivot. If we close where we are right now, below the 2019 high, I think you risk a larger spill, much larger spill. Okay, the daily chart looks like this. Okay, the big level that we were looking at yesterday again was 69.36 into 69.43. A little bit more near term is the 1618 off the high. That's the 786 off the low from September. There's slope support. Watch this here today. Watch this here today. If you're holding shorts, I'd be cleaning it up. If you want to leave a little on with a break-even stop, that's cool, but this is a pretty big support zone. You've had a 3 consecutive day decline into some major support. Here's what the intraday chart looks like, and here's what it looked like last night. So we've dropped into this zone. This is huge. If we maintain a close below it, you're looking for 68.96. That's your next level. That's the October objective monthly open, converges on the lower parallel. If we close back above this, I do think you risk, again, that near-term recovery. Okay, 69.97, basically 70s resistance, bearish invalidation at the weekly opening range highs, right at that upper parallel. I wouldn't even wait till 70.40. That's bearish invalid 70.20. So very similar scenario, and you're seeing this same sort of outlook scenario take stock across all the dollar majors, right? Euro coming to major support, sterling coming to major support, DXY and some major resistance. Here's Kiwi tempting a break of major support. If we close below this level today, again, 68.96 and 68.60 are the next downside levels here. It's the September low. That's all contingent on we holding this level today. Any questions on New Zealand dollar? The RBNZ interest rate decision is on tap tonight. They are expected to raise rates from 0.5 to 0.75. So that's 25 basis point hike is already sort of priced in here. So keep your eye on that. Later tonight, the RBNZ on tap as Kiwi testing support into 69.30 to 69.40 here. Questions? Okay, that is number 5. Number 6 here is gold. And Iman, I know you're into this. Ty, I know you're looking at this. We're at big support, guys, or at least we were looking as if we were looking to approach big support just lower at 1781. I'm going to start with the weekly charts here because this was absolutely phenomenal. I gave you guys an update on where we are now on the intraday charts, but real quick, remember, to anyone who's new to the room here, I see some new names. You can always click on the previous update, guys. If it doesn't provide the daily and weekly chart, it's always one click away. I alternate the assets. So one day I'll do gold with just the intraday, and the alternate will be gold with the daily and weekly. But this was huge. We talked about this level last week. This was published back on the 16th. We had just rallied into that major resistance zone. 1876 was 2 equal legs off the high. Was basic yearly slope resistance. And again, look at the reaction we got there. Absolutely phenomenal. The first level we talked about was 1825. We said, hey, we reversed off big resistance. If 1825 gives way, there's a much bigger pullback coming. It's exactly what we got. Okay. The daily chart last week looked like this. Oh, looked like this. Again, perfect tag and an outside daily candle. It wasn't a reversal because we were still low on the previous day, but an outside candle off that level really was the onset of a near-term pullback. Here's what it looked like last night. Here's the daily chart looks like now. Okay. Big reversal or big outside candle. Another pump fake the following day. Here's the break of key support. First level, last level. This is huge. Why? 1781 is the 618 retracement of the advance off the lows from September. That's cool. 1783 is the objective monthly open for November. Oh, that's pretty cool too. Both of those levels converge on basic trendline support off that same low. 1, 2. Is this a third touch? We'll have to see. But right now, this 4-day decline is heading into some pretty major support. Here's what it looks like on the intraday chart. Okay, so what do we always say? A downside break of a descending channel, typically the sharpest part of the decline. Don't take my word for it. Here it is. Break of downtrend support. Boom, slingshot. Big support, 1781. Eman says, I was short last week at 1868. Nice. but my target hit on Monday overnight trade at 1838. I'm waiting for your webinar to guide us. Well, nice trade. Listen, I'm never gonna blame you for booking profit, right? FOMO is a dirty thing. We can always, regret not taking the full trade and getting that full move, but that was a great trade, Eman, and I don't blame you. From here, this is the next level you really want to pay attention to. If we're going to get a relief rally, a recovery, okay, if we're going to pair some of these losses, this is the inflection zone we should be looking for. Okay, at the end of the day, anything sub 1781 on a daily close basis is basically like terminal. Okay, you might see a little rebound at 1760. There's a decent pivot there I was looking at earlier today, but basically it's 1725, 1730. Now, again, that's not my base case scenario, Eman, but that's the risk with a move below 1781. Okay, right now the focus is on what we get as we get into a drop there. If you're holding shorts, that's where you're looking to clean it up. If you're looking for new exposure, there might actually be a recovery opportunity here, but the point is we're looking for major inflection as we head into 1781. Does that make sense? Jamie, Ty says, Jamie's calling for a long-term breakout higher. Do you agree? Yeah, we're both on that same time frame, Ty. Let me take a step back. I'm been broadly bullish gold the entire year. You guys know that. I've been telling you that for a very long time. I think gold has a lot of upside potential, not only because the inflationary concerns, but the macro type of environment that we're in, I do think is going to give gold a bid. But that doesn't mean we're not going to have corrections. That doesn't mean we're going to have near-term pullbacks within the broader uptrend. So, Ty, I'm not like bearish gold on the whole. No, I don't think anyone could look at this chart and say they're bearish. This is the weekly chart. We're in a strong multi-year uptrend. But the point is the correction over with that drop we got? We could still get a pullback here, but I do still think I'm with Jamie on that, Ty. I think there's a long-term major breakout in gold still. Okay. To maximize, as always, says Eman, is Bitcoin on the menu today? It is. I'll definitely hit Bitcoin, but I do want to hit silver real quick. Who was asking about that? So this is what we look like on gold right now, right? The breakdown has accelerated. We're coming in some major uptrend support. 1781 is the focus on this pullback. So Ty, here's the side by side. If you want to take a quick picture, here's what silver looks like. I don't really track this as closely, so forgive me if my analysis is a little stale. Let's see if we can't figure some new levels here. Okay, turn just ahead of major resistance. I was looking for a stretch into this zone, which would have completed a 618 and that nice little pivot from that opening range that we made in July. Didn't quite make it. Okay, we made it through that. So this is silver on the daily. Okay, here's your monthly open. Failure right ahead of, like I said, pretty major resistance. Here's the turnaround. What I'd be paying attention to here is two things. A, this level right here is the 618 of the rally, right? Excuse me, it's the 50% of the rally. So that's 2340. But just lower is the 618 of the rally and downslope support. So it would be a bigger support zone in my humble opinion. So a little bit of a different take here, right? Where you have gold basically at support or probing support, right? A little bit lower in 1781. Here's silver. I still think has got a little bit more of a drop to go at 2292. Now, not only is that the 618, but just higher is the actual objective year monthly opening range low. Here's your monthly open. You set a low. You ripped. Didn't really have a range to work with, but this is still going to be your monthly range lows in line with that 618. I'm looking for 23 on this drop in silver. That's the big support zone. That's the big support zone. Ty, does that make sense? Let's see if the intraday has anything on this. Okay, let's clean this up a little bit. Okay, and this one, get rid of that 38. Okay. All right, so the weekly open pretty much was pretty vicious on this. Look, I'm gonna add this on. It's just bear with me one sec. I just want to see what this looks like. Hmm. Yeah, you're probably better off working with that. So a near-term pitchfork, just for the sake of clarity here. Again, highlight, it's the same level. It's the 618 right there at the lower parallel. Near-term resistance, bearish inval right here above that swing high, whatever that was. What is that? Like 2430 right there. So that's all to say, Ty, that we have broken down near term, and the risk is for correction. Obviously, that really steep upslope just gave out. Watch that 50 near-term resistance back at the monthly open, but the bigger support zone, in my humble opinion, is going to be right into that 23 handle, 2302, 2292. That's really critical. Really, really critical. So you see that the median line for the broader formation we've been following on the daily charts there, but also that pitchfork we just added off the latest high, low, high. This 25% parallel is right there as well. All right, Ty, does that make sense? That help? Yeah, also looking for entry. You are a long-term bull, yeah, like gold. So Ty, yeah, long-term I am. Just look at what's been going on. You have rapid inflation. Okay, you have markets are running hot. That's true, right? But there's so much dynamics with the supply chain problems that we're seeing. Increased energy prices are going to hit everything, right? So I do think the precious metals will perform rather well, right? Now we can't talk about this, Iman, with regards to your comment, without talking about Bitcoin, because as we've seen, the inflationary concern hasn't really been aiding gold, right? This doesn't look like people are too worried about inflation, but that could be deceiving, because what they could be doing is moving their inflationary sort of shift towards Bitcoin. Bitcoin's had a rough couple of weeks, days, right? Here's what the Bitcoin chart looks like. Let's do this right now. So what did we just do? We did Kiwi, we did gold. That was 6. 7 is silver. Okay, so here's what silver looks. 8 is Bitcoin. Here's what Bitcoin looks like on the daily chart. So remember, we were working with this price analog to the 2020 October break, which looked very similar to the October break we got this year, right? We got a little consolidation right before a pop. Here's the October breakout. Last year, okay, we had a little consolidation right before the pop. The October breakout happened a little bit later here, but there was the rally. If you take that price parallel and extend it off the breakout we're making, it's starting to decouple now. Okay, we have to pay attention to that. So the basic premise of the idea that we were talking about last week was, excuse me, based on the price analog, there's an opportunity here for a little bit of a pullback, just like we got here, right? A couple of weeks into the breakout, you got a decent pullback, a failure again, another decent pullback before the breakout. That's what this was. That's what I thought this was going to be. If this price analog is going to hold, these two support structures really need to hold. Ideally, this holds today, but that's your last straw. Anything below 53,000, you're risking a pretty major correction in Bitcoin. So Again, just a disclaimer, I'm still long, guys. I think that, you're going to get maybe a little bit more of a drive, a whisk, maybe an attempt to try to break this formation, but, I'm constructive above 53, 52,950. Resistance, monthly open, still key resistance, 66,325. And Bitcoin's the digital gold, says Eman. Well, that's the argument. That's the argument. And you could make that argument based on what you were seeing in price action alone. As the inflationary numbers got bigger and things looked worse and worse and worse, gold seemed to be just ripping, but then that all fell apart, and you saw that Bitcoin was actually taking part of that. So I do think there is a shift. There's going to be a little bit of a secular shift here, I think, towards using Bitcoin as a little bit more of a store of wealth, whether it's the inflationary hedge or whether it's concerns on the risk-off environment. At the end of the day, I do think this eventually catches a bid, but we still could see another leg towards 53. Don't be too surprised if that gives way. And bear with me one sec. Let me just see what this looks like. Okay. Okay. So if we take a retracement from the well, it's not the yearly low. This is your yearly low. But if you take a retracement from the lows they made back in June for this entire multi-month rally, at 38.2 converges right on that high that we were looking at anyway. Key support in Bitcoin. Further highlights that 53 region. Okay, looking for an exhaustion low ahead of this if we are going to head higher in price. Questions? All right, so that is Bitcoin. I'm gonna pick up the pace here a little bit. Here is we hit okay. This number 9 is Aussie dollar. So by Aussie's part, here's what the last update looked like on that front. '17th. Here's Aussie. Okay. So for Aussie, we are at a big support zone as well. Here's what Aussie looks like on the weekly charts. This is pretty big. It doesn't look like there's big support here, but there's a couple of things to look at. First of all, I just wanted to highlight again, 75.40, what a turn. We nailed that. It was a great trade. You had that 52-week moving average, down slope resistance, 100 off the low, the swing lows for the opening range lows of the year. It was such a beautiful level. I obviously faded out way too early on this, but here's the decline. Breaking below the 618 retracement yesterday of the ascent keeps the focus lower. Now that decline is coming to some interesting areas here on the daily chart. Here's what it looks like. First thing is going to be just the objective low day close from back here in September. It was a low day reversal close. It was also the objective October open and the swing lows from October 6th on that dip. Here's where we are now. Now let me give you a better picture here. Here's what the daily chart looks like. This is a 3-point touch. 1, 2, 3, break, support. That former slope resistance, former channel resistance is now support. The low day close, last month's open, right here. The last 3 days, we've just been basically meandering around that 20 with that 72.20 level, 72.23. What do you do here? Well, again, by my part, I have this coming in some major support. I have the dollar coming in some major resistance, right? So that's possibility for a little bit of a pullback. That's dollar weakness, dollar coming off resistance, Aussie coming off support. So here's what it looks like. You have a pretty neat and tidy weekly opening range taking shape right above that 72.26 level. I'm not going to be a stickler for it. I don't think this is necessarily a break yet, but I'm looking for a reaction here. Bearish invalidation at 73.29. If we break lower, watch the slope right around 72 at this point, but the bigger level below that would be 71.38, 71.21, big zone. Again, not my base case scenario. I'm more of the front looking for an exhaustion low. It's the same setup essentially across the dollar majors, just for a near-term pullback. We're in a very tidy, well-defined downtrend. It's been, really well. The market has respected these levels rather well, but can't continue favoring the downside right here. Okay, you need either a rally towards at least the median line, 72.70s, right? But I just can't get excited about anything on the short side at these levels. Okay, we've already dropped, it hasn't been that long, but we've already dropped 4% in just, I don't know, 2.5 weeks. So still same risk of downside exhaustion here in Aussie near term. Questions there? All right, number 10, here is dollar yen at resistance. Stop traffic, blow the horns, blow the trumpets, whatever you got to do. This thing is going to fake out so many more people. Again, remember this level we've been talking about, 14.55 into 114.92. It's the same level we've been talking about since last month. We ripped into it in September, pull back. Here it is again. Last week, ripped right into the upper end of that zone, 1490s, before pulling back. Here we are again, still below the median line. What do you do? Again, if you're holding longs, this is where you want to take them off the table. Bring your stops to break even or better. I'd definitely be inside on the money. This is huge resistance. If this breaches, there's nothing till 116. If it holds, you're at risk for exhaustion. Now you're marking divergence on the daily chart, but both of those reference levels are above 70. Again, it's a weak signal. So what do we do with this? Here's what it looks like on the daily chart. A little bit more of a warning signal here. A little shot across the bows. You've seen continued ongoing divergence with every subsequent high that we've made. A series of higher highs, a series of lower highs. So the exhaustion trade still could be there. Now, this is a really good example, guys, of how opening range strategies can really give you a little bit more of a tell, even when they fail. Here's your monthly open. You set a low in the first couple of days of the month. You test that high again. It breaks on the 16th. Objectively, that gives you a long bias into the close of the month. But stop traffic, that's still huge resistance. So what do you do? If we close above 1450, I think you're marking resumption, okay? 1551 and beyond. What is that 618? Is that a right one? I'm sorry, hold on one sec. Yes, that's still viable. It's still a decline off the 2015 highs, right? 1551 on the daily chart. Nice level there, but still exhaustion on the long side. Here's what it looks like on the intraday chart. Even more precarious in that the advance looks a bit tired. So this is a pitchfork I just measured out over the last couple of days here off the low, upper parallel resistance. Is that the same upper parallel resistance? If it is, this should be the exhaustion. November open support at 114. And let me just fix this retracement to the new high. There we go. So I am bearish dollar yen on the longer term. On the near term, I still think exhaustion. It's the same trade. Dollar exhaustion may be upon us over the next few days. Questions on the abomination? Okay, number 11, crude oil. Here is what crude looks like heading into trade on Tuesday. Here's the weekly chart. Okay, and here was our last update on crude, was right here. Okay, so I'll show you the intraday chart in just a moment, but the weekly chart, big support, 74.94, okay, into 77.26. Remember that was huge resistance on the way up. We talked about it for months. The 2011 low, the 2012 low, the 100 off last year's low, which was grounded at 0. So again, I don't like using that extension per se, but this is the pitchfork we've been in on the weekly charts, has been super, super clean. The larger pitchfork off the lows from 2016 and 2020, and the real near-term pitchfork just off of last year's dip towards that November low. Resistance, resistance. We called that turn. It was a really nice mark right into the rally that you made in 2013, objective yearly low. You saw the turn there, pull right back into support. This is key support again. So 74.94, 77.26, those former swing lows are now support again. Add to that, the median line is right in there. So yeah, near term on the weekly chart, I think you're coming to some support here. Could get a little bit of a recovery. Does that mean that this is the resumptive trade? Might not be out of the woods just yet. Try saying that 3 times fast. Here's the daily chart, guys. Super clean, beautiful turn from topside resistance. You had another outside daily reversal here. Shifted the focus lower. Here was the first key support level. This was what we noted as bullish inval, the 2011 swing low. Very nice pivot in price, right in line with the median line, right in line with last month's open. This is huge support. This is huge support. So near term, yeah, still could be a little bit of a rebound from this level. Wouldn't be too surprised. Here's what the intraday chart looks like with that constructive pitchfork off the high. Worked really well. Kind of messy here, trying to probe the 75% parallel, but here's the last anchor and pop through. Looks like a breach of the weekly opening range near term, a retracement off the high. Looks like this. I know it's gonna get really cluttered, but bear with me 1 second. And there's the 38.2. Drop this. Key support, downside break. You're looking for that May 2018 high at 72.87 on the downside if it breaks from here. But the whole point is you get a little bit more of a recovery off of this, I think. Near-term resistance, 78.84. Key resistance into the 80 handle. Questions on crude oil? Now, guys, there was news here that the SPR got released today, that that's the Strategic Petroleum Reserves, by the way. So they are thinking that the release of this oil may drive prices down. Obviously, his request to OPEC kind of fell on deaf ears. So this is the attempt of the administration to try to reduce oil prices. I must say, guys, that this has happened before. I think the last time this happened was like, don't quote me, it was less than 10 years ago. And if you look at that, last time we tapped the strategic reserves, prices only dipped nominally, and then they ended up going higher. So, Ty, I agree with you. It is a laughing matter. Only it's not, because conceptually, yeah, it's sort of, this whole thing's a train wreck. But in the real world, this has larger implications, right? Forget just gas prices and driving around and people's leisure. It's going to hit price of everything. Higher energy prices hits everything. Every product takes more to get on that shelf in the store. So this attempt, while sure, may shore up things in the near term, history has shown us that releasing oil reserves from the SPR, it's a temporary thing. It might help in the near term, but longer term, it actually stokes prices even higher. Ty says oil is everything, is in everything. Absolutely, absolutely. And that's why it's kind of frustrating when you hear these people on TV, whether it's news agencies or either whether it's financial agencies, news publications, where they're talking about, oh well, the driving and the heating costs will be higher. That's very true, right? Heating costs are going to go higher across the board because of natural gas and all the like, but it's going to cost higher everything: bread, milk, tomatoes, everything, right? So there's a lot more there, and I got into a tangent. Ty, you got me talking about that. So we'll leave that there. But at the end of the day, oil is coming to a big level here. I am looking for a near-term inflection. I don't know if you mark resumption. The wave count would suggest this is sort of maybe wave 3. And I do think that you probably go for another stab into a low before resumption, but you're coming off big support. Wouldn't be too surprised if we see a little bit more of a kickback here in oil. Any questions on crude oil? All right, I just want to take a quick note and talk about Swissy. This was also something that we've been sort of covering over the last couple of updates, and the rally is coming to an interesting level, and it's breaking out of an interesting level. Here's what Swiss franc. Let me show you on the weekly charts first. So not a trade I usually get really involved in, but there was a major turn last month that came off of pretty big support. Here's the 52-week moving average. Here's upslope support. Here's the 618 of the rally from the low that we made in 2015. Beautiful turn. The level of resistance I was looking for was right here at 93. So that hit last week, and we kind of been sitting looking for, are we gonna get a decent pullback, a decent, coil to get deeper into this? I don't know. Here's the breakout. It's the high day close from back in October, or excuse me, September. It hasn't closed above here yet. But if the weekly close materializes at this level, 93.50 on the upside, 94 is major resistance. That's the yearly high week close. Is it a breakout? It takes a lot of dollar weakness to move higher. So I actually think if the dollar pulls back, this actually might get another push on a recovery, sort of another reset back towards 92 for the entry. I don't know. Here's what the daily chart looks like. I'm not involved here, but here's what it looks like, guys. If this is a breakout of the multi-month, multi-year downtrend, I'm going to need a break above 93.67 to validate that. Forget the 100 and the 786. They're still viable extensions and retracements, but null and void. It's all about this high. So if we breach the high from September, yeah, I think that's a major, major breakout. But into this region, I still think you risk exhaustion. It's the same dollar trade, right? So here's what it looks like on the intraday chart. I have updated the slope. So quick, Ty, take a quick picture here if you want this side by side. But the intraday slope looks a little bit different from what I've been following. So this is what I showed you guys again last week on the 15th. Here's what it looks like now. So I just took the extension off of these highs instead. Keeps us inside support, support, support. High resistance here, 93.67, 93.56. This is critical, critical resistance. So long story short, dollar Swiss, sure, yeah, maybe a little bit higher. 93.60s, that's a big level. That's where you want to kind of lighten it up, look for the possibility of some exhaustion. On the other hand, if that buckles, you're going to see a rip, but the dollar's just been under tremendous, tremendous upside pressure. I think you need a little bit of a blow off here before you buckle above 93.67. So that is Swissy. Last but not least, here's a quick look at Bitcoin. We talked about Bitcoin, did we? We talked about this already. And Ethereum, very similar scenario. Looking for basing here on support, need the buckle above 43.80 to mark resumption there. I had that in my notes. It's something I want to talk about, but I think I already hit you with the Bitcoin. So that's everything I've got, guys. Last but not least, just a quick look at what broader risk is doing. Here's the SPX. I think we're at risk for a little bit of a correction, but here's what it looks like on the intraday chart, guys, or on the weekly chart. Guys, all things held constant, if we were to close the week right here, right now, we've already made an outside weekly reversal off fresh record highs. Okay, SPX typically reacts pretty decent with outside reversals. Here's a bullish outside day week reversal, bullish outside week reversal. Here's a bearish outside week reversal, did nothing. Bearish outside week reversal was a pause. Bearish outside week, bearish outside week, you know what I see? You see what I'm saying? So it basically suggests you could see some pullback here before the resumptive move higher, right? If we were to close at these levels, that's the weekly chart. Daily looks like this. Yesterday was an outside day. It wasn't a reversal, but it was an outside day into slope support. What's this? If we buckle today and close below this slope series, that would be bearish. That would be bearish. If we close right here, where we are right now, you're simply at uptrend support. So yeah, I'm looking for something like over the next 24 hours. Here's what it looks like on the intraday chart, right? Forgive the lines here. I was just doing some regular regression analysis, looking at what we could do here. But here's basic coil, support, form resistance, support, support. This is a turn from the median line. The risk is for a test of uptrend support. You turn from uptrend resistance. That's the risk if we head lower from here. Now, there's no retracements or anything that you can necessarily work on just yet. I don't think it's warranted. One other thing is a basic pitchfork off that high to give us some guidance if we are going to correct lower, would suggest that on the rebound here, look for resistance there. On a hold there, downside break, look for a target there. Now, if you add even more color onto this, you take a quick retracement, you see that the 50 is right there, okay? And once you get that pump, if you do get a near-term recovery, take an extension, 1, 2, 3, to get that 100% extension where we could find near-term support. Okay, so that's all to say, near-term, heading into the US trade session today, looking for a reaction to 40.70. Excuse me, 47, 47.01. That's what we'd want to see hold if we are heading lower. All right, so some real nitty gritty analysis there for the SPX I was checking out earlier today. So guys, with that, that's all on my end. If you have any other questions or trade setups, feel free to throw them on the message board. Otherwise, we'll go ahead and wrap it up. Theodore says, Merry Christmas, good luck with the birth. Is it a boy or a girl? We're getting another girl, a house full of girls and me. So pray for me, Ty. Looking forward to it. I can't believe I just re-upped and you are on the vacation. Well, Theodore, it's not really a vacation, Ty. I will still be giving updates as much as I can as the market warrant. Don't forget, you're heading into an extended holiday break here in the US this week. So heading to tomorrow, liquidity thins, market depth starts to really shallow out, which could cause really big swings in price, but they're with little or no volume. So definitely heading into Wednesday, lighten the load, if not stay flat as we open up into the next following week. And I'll give you guys updates as much as I can. Believe it or not, I'm following markets, even having a kid and on vacation, guys. I live and breathe this stuff. So I will be in tune with what's going on. I'll give you guys updates as I see fit. Otherwise, best of luck trading, guys. Jamie will keep you guys updated. And like I said, I'll try to throw up some sporadic updates on the intraday of what I'm trading. Till then, best of luck trading. Enjoy the day's maximum with your angel baby girl. Thank you, Iman. All the best to you and the family. Marco, Theodore, Steve, Aurelian, Jay, thank you all for all the comments, guys. Best of luck trading. I'll be in touch on SB Squawk and on the intraday trade. And if I don't see you, best of luck, guys. And I will see you next year. The first webinar is scheduled for January 4th. That'll be on Tuesday. And I can't wait till then. Best of luck trading, guys. God bless you all. Same to you, Ty. And I'll see you soon. Cheers.